My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I don't want to make friends, just try and make some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CBC or tweet me at Jim Cramer. Here's what the true bears, the ones who hate the market, never seem to get. When push comes to shove, a lot of people believe that things will go right. And that's how you get a day like today, where the Dow gained 250 points. S&P jumped 1.13%, and the NASDAQ just crushed it, going up 1.95%. Let me say right up front, the market shouldn't be going up. We have rampant inflation. Sell, sell, sell. Rates flying higher. Sell, sell, sell. The specter of companies missing estimates. Sell, sell, sell. A behind-the-curve Federal Reserve. Sell, sell, sell. They know nothing. And a non-zero chance of nuclear war, thanks to the unhinged leadership of Vladimir Putin. So how the heck can we rally? Where'd all the sellers go? For 2 weeks, we had sellers willing to go through buyers, meaning they didn't care if they sold stock below what the buyers were willing to pay. They just wanted out. Things are arguably worse now than they were back then, but the market's holding up better. Does that make any sense at all to you? The answer is yes, it does. If, and only if, you suspend your rigor and just have hope. Now, I will never endorse hope as an investment strategy, but when you zoom out, it's kind of an interesting mindset. Why? Okay, because when I got into this business some 40-odd years ago, the Dow was at 1,000, and now it's near 35,000. There were a lot of moments where the market went up, even though it probably didn't deserve to, given the inputs. But then we found out the inputs were wrong, or things broke a different way, and the rally suddenly made sense. Shh, don't tell the bears. But you couldn't gain 34,000 points on the backs of false information and a too-easy Federal Reserve. So let's take 2 weeks ago versus today. We know that every major inflationary input has gotten worse by the day, and we've now become seemingly numb to the slaughter in Ukraine that we're helpless to stop because Putin is crazy enough to go nuclear if the United States gets directly involved. Rather than mutually assured destruction or the MAD doctrine, he's embracing Richard Nixon's Mad Men theory, where you act as crazy as possible, scare your opponents into staying on the sidelines. If things are worse than 2 weeks ago, then why is there more hope? Well, last week we had a Fed meeting where Jay Powell made sure everyone knows that he's poised to raise interest rates rapidly because the economy's overheated. The result, one of the greatest rallies in years. Then yesterday, Powell once again talked about inflation, saying he'd think about nothing of a 50 basis point double rate hike at the next meeting if it would help tamp down inflation. Now, initially, the market took this statement negatively yesterday, like Powell was saying he'd be willing to destroy the economy in order to save it. 50 basis points here, 50 basis points there. Pretty soon you're talking about real rate hikes. That caused us to get hit yesterday. But today, upon further review, hope, Wall Street reached a different conclusion. That was a conclusion that was more like what happened last week when the market roared after Powell's first rate hike. See, a week ago, there were plenty of skeptics. There were two camps. Those who believe that Powell could easily throw us into recession if he isn't careful, and those who believe that Powell's a big softy who's simply too late to meaningfully stop inflation. The latter camp has zero respect for Powell, the man. I think they're dead wrong. But I'm in Jimmy Chill mode right now, so I won't bother castigating them. I'll just take it out on some of my more hateful Twitter followers later this evening. Now, though, there are fewer skeptics. I think last week we saw a Jay Powell who recognized that things really haven't been going his way. I said that last night, remember? Yesterday we saw a Jay Powell who struck the perfect balance. He won't throw us into recession, but he'll still go to great lengths to stamp out inflation. He was forceful, albeit flexible. In other words, Wall Street now has a lot more confidence in Powell's bona fides as an inflation fighter. That means he's taking off the extremes, though. The companies that have seen their stocks soar because of price increases, steels, plastics, papers, well, they better get used to a world where they'll have less pricing power, can't constantly put through those price increases. And the stocks that do well in a recession, I don't know if you saw them today, maybe they're not as great buys as we thought. The drugs, sort of healthcare, they all took it on the chin. This is a remarkable moment because it's not supposed to be this good. There should be more people saying that Powell will fail and he's a paper tiger. There should equally be people who say that this economy can't handle the brakes. But their silence, as measured by the strong 3-to-1 advanced decline ratio, is simply deafening. How can people be so confident that Powell won't crush the economy? Well, I think it's dawning on many of the biggest of investors that this economy is so strong that it can handle a series of rate hikes because so much of the spending we're seeing is related to the great reopening and the normalization of remote work. That's finally drilled into their heads. That said, while I appreciate hope as a mindset, I'm not as confident as a lot of the buyers who are paying up at the end of the day. I suspect things simply aren't that rosy. We are seeing a level of enthusiasm here that, to me, feels unjustified. We shouldn't be going back to a mentality where we like all stocks because so many of them will miss their numbers and so others will hit us with negative forecasts. However, it's clear many stocks that were stuck in a prolonged bear market have been sprung by Powell's comments. The former high flyers that have been obliterated since November by inflation fears have suddenly gotten a new lease on life. But here's the problem. Tons of those stocks just aren't worth much, regardless of whether Powell steers us into a soft landing or a hard landing. We've been saturated with awful merchandise, the greedy men and women of Wall Street, from garbage IPOs to garbage SPAC plays. And these virtual albatrosses weighed us down. They're millstone around the market's neck. And I think they'll go right back in the penalty box the moment we get more economic data that is hot. If the numbers are scorching, people realize Powell has to tighten more aggressively, and this group will get dumped. Why not dump it before that happens? If the numbers are bad, people start wondering what any of these newly minted stocks are really worth. Why not get out ahead of that? So let's recognize that this is a moment where Wall Street recognizes that Jay Powell is ready to use all the tools at his disposal to slow down the economy, giving us time to fix our supply chains, restock our inventories. One last thought that I think many of you have. If a company's doing really great, what the heck does it matter about the Fed? Why are you talking about the Fed so much, Jim? I sympathize with that view. Companies should be valued on their own merits. Same with strong sectors, as you will hear later in the show. But that's not always how it works. There are periods, extreme periods, where the economy gets so out of whack that the stock market itself becomes a pariah asset class, a source of funds for other asset classes. So an individual company's merits simply won't be reflected in its share price unless it catches a takeover bid. Given that the Justice Department and the FTC seem pretty hostile to mergers, I wouldn't hold your breath waiting for an acquisition to save you. So the bottom line, right now, we need to bow down to the Fed and the forces of inflation. Anything that brings down inflation, including tough statements from Jay Powell, will make big institutional money managers more likely to buy stocks rather than sell them. For the moment, that's what controls the stock market, as long as the war goes on and the economy breeds inflation that soon few can afford. I'm starting the day going with Cortez in Texas. Cortez.
Cramer, longtime follower, Cortez in McKinney, Texas. Thank you. Wanted to ask you a three-part question about the big company DuPont that's been around forever.
Right.
Do you think they have the strategies to continue to deliver to our shareholders? And what about the superb sales?
Cortez, this is a really tough problem. I'll tell you what. We bought this stock very, very low for the Travel Trust. And we told CNBC's Investing Club when it went higher, it's time to liquidate. Why? Because we just don't know how much more oomph there can be in that particular stock. We do think Ed Breen's doing a great job. We think long-term it's fine, but short-term it is not the place we want to be. How about, let's stick with Texas. Let's go to Carson in Texas. Carson.
Booyah, Jim. This is Carson.
Booyah.
Make sure to say hi to David for me.
Dave Faber?
The stock I'm calling about. Yeah, Dave Faber.
Love
the
him.
stock on the street.
Fabulous.
Stock I'm calling about is CRM Salesforce. Got it in the last year around 280. It's around 220 right now after being about 190 earlier in the month.
Right.
Do you think it can pull back, given
I tell the Investing Club that Salesforce remains one of my absolute favorite companies. There are various times where this stock has just been horrendous. And those are times, like if you take a look at between 2015 and 2016, you would just feel this was the worst stock in the world. And then Benioff comes roaring back with a great set of numbers or a terrific acquisition. I would not sell Salesforce. I told the Investing Club, buy Salesforce. We need to bow down to the Fed and the force of inflation right now. That's what's working on Mad Money tonight. There is always a bull market somewhere. So could there be one in the ag stocks? I'm going to take a close look at the space. Then why can't Wall Street get a handle on what to do with Nike? I'm going to give you my take. And Bausch Health is preparing to split into 3 companies, and I'm learning more about the deal with the CEO and why some big company doesn't go buy one of the divisions. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.